Americans for Fair Taxation presents the Weekly Chairman's Report, written by Steve Hayes, president of Americans for Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, July 12th, 2024. The Moore case, a decision bad for taxpayers, but good for the fair tax. On June 20th, 2024, the U.S. Supreme Court handed down its decision in the case of Moore versus United States. By a 7-2 margin, the court ruled that the transition tax, defined in Section 965 of the Tax Cuts and Jobs Act, was constitutional. Now, that tax was imposed on the unrealized earnings of American citizens holding shares in a foreign corporation. The Moores owned approximately 13% of KissenCraft, an Indian corporation that was classified as a controlled foreign corporation for U.S. federal income tax purposes. That means that U.S. taxpayers owned more than 50% of the shares. Now, KissenCraft generated certain earnings that, under the income tax law at the time, would not be subject to U.S. taxation until such earnings were distributed to its U.S. shareholders. But KissenCraft's earnings remained in the company and were never distributed. Now, the Supreme Court disagreed and ruled that in this specific instance, taxing unrealized income was constitutional. The reason was that KissenCraft actually generated the income and that it was constitutional for Congress to attribute that income to the Moores. Justice Kavanaugh, joined by Justices Roberts, Kagan, and Sotomayor, wrote the opinion. In that opinion, they carefully tried to craft this as a narrow ruling that applies only to this particular instance. They made it clear that they were not giving Congress blanket authority to tax any and all unrealized income. Justice Jackson believes that there's no requirement for income to be realized and that it's perfectly fine to tax unrealized gains. Still, she signed on with the majority. Justice Barrett and Justice Alito stated that the IRS does not have a right to tax unrealized income, but they concurred with Kavanaugh's opinion apparently because the Moores failed to challenge other provisions where income realized by an entity was imputed to shareholders as taxable. Justice Thomas and Justice Gorsuch dissented. Justice Thomas clearly stated that income had to be realized before it could be taxed and did not agree that it could be attributed to shareholders in the manner approved by the majority. Now, although the court's ruling does not authorize the wealth tax, Senator Warren and her allies are doing a victory dance. They apparently don't read the opinions as everyone else does, and they claim their proposed taxes are now approved by the court. Now, President Biden has made no secret of the fact that he wants to tax the unrealized gains of capital assets owned by wealthy Americans. In his eyes, these wealthy taxpayers are being unpatriotic by holding their assets instead of selling them and paying taxes to the federal government. He mistakenly sees this decision as approving of his plan. In conclusion, because the Supreme Court is composed of people who are academics and who, for the most part, support big government, the majority opinion is not surprising. Also, there was a barrage of pressure from the media and other elites that a ruling against taxing all forms of unrealized income would cause significant damage to the income tax system and would seriously undermine the government's ability to fund itself. They were correct. There are many provisions in the Internal Revenue Code that would have had to be rewritten if the court had ruled that only realized income is taxable. While the court did stop short of giving blanket approval to taxing all unrealized income, they left the door open for the president and people like Senator Warren to be more aggressive in their plans to punish the rich, enrich their friends, and push their agenda. If President Biden is reelected in November and the Democrats end up controlling both the House and the Senate, it's a sure bet that there will be a flurry of legislation passed and signed into law that makes more and more different kinds of unrealized income taxable. Will it be constitutional? Well, they don't really care, because they know it'll take 5 or 6 years plus millions of dollars for any challenge to their new taxes to reach the Supreme Court where they could be struck down. The D.C. elites hope by then the court will be packed with justices like Justice Jackson, who sees no limits on what the government can tax. In all likelihood, the first new unrealized income taxes will only target wealthy citizens. But again, it's a sure bet that more and more of those taxes will quickly start reaching down to more and more of us. Now, if the DC elites had their way, you'll be paying a hefty tax bill on the appreciated value of your home, even if you haven't sold it and are still living in it. This could be devastating to middle-income taxpayers who have lived in their homes for decades and have experienced a significant appreciation in value. In like manner, if the stock you purchased for $300,000 decades ago is now worth over $1 million, you'll be getting a big tax bill as well. In the elite's way of thinking, you have a patriotic obligation to sell that stock and pay taxes on the gain. If you don't sell, they're going to tax you anyway until the Supreme Court says they can't. There are plenty more real-world examples because once you empower the DC elite, they will continue to take more and more of our income and our assets. Their reasoning? Well, they're so much smarter than we are, and they'll use our money much more wisely than we would. They'll take care of us. Just trust them. Now, obviously, the only reason for talking about the Moore case is because the U.S. continues to rely on a corrupt and unworkable income payroll tax system. Looking on the bright side, though, the DC elite's unbridled lust for our money could be their ultimate undoing. As they continue to thrust their greedy little hands deeper and deeper into our pockets by taxing money we haven't received, people are going to get more and more fed up with a tax system where they have no control over how much tax they pay. In that environment, the fair tax looks more and more attractive. By taxing only the retail consumption of new goods and services, the fair tax gives people an unprecedented level of control over their federal taxes. Want to pay less? Well, you can choose to consume less, or you can choose to buy used items that are not subject to the fair tax. In any case, the fair tax will never tax any unrealized gains because you can't make retail purchases with money that you don't have in your pocket. In addition, the fair tax will result in greater freedom for all, a much more robust economy than we could ever have under the income tax, and it will all but eliminate illegal tax evasion too. The solution? Pass the fair tax. Now, why would DC pass the fair tax and give up an almost unlimited source of donations? Well, they won't, at least not voluntarily. The only way they will is if the rest of us demand it. Isn't it time to end this ludicrous tax collection system and the IRS along with it? Now, there's going to be a vote on the fair tax in the House of Representatives. We now have the opportunity to force all members of the House to show where they stand. They can vote for the present income payroll tax system, or they can vote for the fair tax. They can support the corrupt income tax in the IRS, or they can vote to eliminate it. It can't be any simpler than that. They can hide the true cost of their government, or they can pass the fair tax and show everyone the true cost of government on every retail receipt. And finally, they can support the largest transfer of power from the government to the people, the fair tax, or they can vote against it. Now, if members think the fair tax needs to be amended to address a problem, they can propose the change. Don't let them get away with rejecting the entire bill because it has a perceived flaw that can be easily addressed, and if it's a real flaw, it can be corrected in the final bill. And don't think for an instant that there aren't any flaws in the income tax. Help us bring about real tax reform and stop future IRS abuses. By contributing or investing $10.40 a month, you help provide a financial base to Americans for fair taxation. Now, if you can make larger contributions/investments, these will be used not for salaries as we're all volunteers, but for the needed updates to our economic studies which will be vital for all future years. Please go to FAIRtax.org to invest in AFFT and help us pass the fair tax. It's an investment in your and your family's future.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at FAIRtax.org.